Today, sources say Income Tax Department is accusing the company of not declaring cash sales worth 1,000 crore rupees to evade taxes.
Hero Moto is the top Nifty gainer. The company is likely to showcase a range of premium motorcycles later this month to expand its presence in the faster-growing segments.
Hello and welcome to a fresh new edition of Markets Forward, the show where we aim to get to you everything you need to know, the key data points as you gear up for another trading session. I'm Prashant Nair. With me, my colleague Surupi Upadhyay. Surupi, hi.
Hi, Prashant. Well, lots to talk about today as usual. And of course, over the next 20-odd minutes, we will get you all the cues that matter, all the news flow that could be impacting trade even tomorrow. The top corporate voices in the commentary, along with the events that you need to watch out for. But let's start off by talking about what was yet another volatile day, Prashant.
Volatile and helped single-handedly by Reliance,
oh,
right?
Yes.
Because if it had not been for Reliance, the market most likely would have been down and out. So about 25, the Nifty ended, by the way, about 45 points higher, 25 points coming, index points coming in from just Reliance Industries. So in that sense, it's a deja vu. It's a repeat of what we saw yesterday, although the change on the Nifty yesterday was double of what we saw today. We were up 80 points yesterday. Today we were up about 30. Now, supports for the Nifty, I just want to get straight to the levels. To the Nifty, it's the 20-day moving average, which is roughly around the 21,488 level, which, of course, I mean, we're putting on some distance between then with the late surges like today and yesterday from where the 20-day is at. And then, of course, there is the 21,447 level as well, which was the low we saw yesterday. For the Nifty Bank on the downside, again, by the way, the Nifty Bank also surged and it ended higher. But there, the level to watch on the downside is 46,720. It's largely ranged. Infosys, TCS, they will set the course in terms of earnings, etc. Both report after market hours. And very interesting, last, I think, 5 or 6 minutes or so, Infosys, the stock, saw a 40 rupee move. It surged from the day's low to the day's high. It was a very small range today, but that's essentially what happened. And of course, I mean, later tonight, from a global point of view, we get the CPI numbers out of the US, which, of course, can hand over either a very happy Wall Street when we come back tomorrow or a sulking one.
Absolutely. So inflation numbers important as always, and very dramatic move on Infosys, as Prashant pointed out. Absolute high drama playing out there. Perhaps the market getting a little excited ahead of numbers. But beyond, the clear moves, that's Reliance, as Prashant spoke about it, and autos, which Vivek will tell us more about in a bit. Barring those two, there was no clarity within sectoral moves as well today, and that will be illustrated when we bring up the Nifty contribution chart. I mean, for instance, for a Reliance on one side, there was a lot of selling coming off in a lot of the large banks. So ICICI Bank, HDFC Bank, I mean, these stocks were simply not adding up, though you had access on the positive side of the screen. So within banking, very, very divergent trends coming in. L&T, of course, is in focus ahead of the all-important launch of the Mumbai Trans-Harbour link after a wait of over 3 decades. But anyway, for today, the stock was down and out. And then FMCG as a pack, that's another clear trend, that FMCG as a pack saw lots of selling. Lever, Nestle, even ITC for that matter. So lots of selling on the FMCG side of the market. But other than that, I mean, it's a day where mid-caps really call the shots. On the index, some of these big boys, these big stocks, they were netting each other off. The net result, obviously, was just about a 30-point up move on the index. Well, let's get started and tell you about our lineup today, what we have in store. We'll be starting off with all the top movers of the day with Vivek. There are 3 stocks, Polycab, Hero Moto and Shriram Finance, which were buzzing around. Some more specific inputs on all of those coming up as well. Then, of course, we get to our popular segment, D Street Chatter. Nimesh is going to join in to talk about all the buzz from the dealing rooms. And in specific, throw some light on Indus Towers. That was quite the talk of town today. Last but not the least, we will look at all the key events to track tomorrow.
Okay, well, let's get to our first segment, the movers and shakers. And Vivek is here to wrap that up for us. Vivek.
Well, thank you so much. An action-packed day, and earnings season kicks off in some time. So the first set of stocks today, of course, we have to highlight the auto pack, especially the two-wheeler auto stocks. The NSE auto index, one of the top gainers today. The entire two-wheeler auto index, of course, we'll discuss more about Hero Moto in a bit. So new launches, also you remember there's an upcoming IPO in this particular space. Two-wheeler electric IPO is the one that is coming up. So on the back of that, you're seeing quite a bit of rub-off. And today, all of the stocks did very well in the session. Now, moving on, the second set of stocks that we need to watch out for are the mid-cap, both banks as well as NBFCs. So have a look at some of the names today. RBL Bank up on very strong volumes, one of the top gainers in the F&O space. Shriram Finance, this particular stock saw an upgrade from the brokerage stock, up 6% in the session, also likely nifty entrant. And Manappuram Finance yesterday was one of the top laggards, but this particular stock today recovered quite smartly despite the IPO of its arm being kept in abeyance. The next set of stocks that we're tracking, we have to discuss the consumer durable. It's been a mixed bag for them. Polycab was the one that sulks all the B2B names. Actually saw a bit of sulking today, KEI Industries, RR Cable. But have a look at Havells and Voltas, the B2C names did very, very well in the session. Havells up over 4%. The next stock on our radar, is a pharma name. So Torrent Pharma, today there was an upgrade from Jefferies in this particular name. They believe that valuations here are quite attractive. Stock up almost 5% in the session. On the other hand, Dr. Reddy, that saw a downgrade, and Dr. Reddy, in fact, ended as one of the second biggest loser as far as the Nifty index was concerned. And lastly, one stock from the broader market, Phoenix Mills, strong quarterly update, but despite that, stock saw a bit of profit booking today, ended up lower by almost 5%.
Okay, all right, Vivek, thank you very much for all that action. Let's now welcome in our guests. Joining us today are Shilpa Rout of Prabhudas Lilladher, and we also have with us Ambareesh Baliga. Ladies and gentlemen, thank you very much for being with us. Shilpa, let me come to you. What thoughts looking at the market? Because at the index level, that range is intact. Now we're a little closer to the top end of it than the bottom. What's your advice here in terms of any index moves, index trades?
Talking about indices, we see that the range is very much actually intact, and 21,500 on the downside and 21,750 on the upside. So this 200 and 250 odd points of range is being played out very well. So I believe that this is also a beautiful way to play intraday. For people who trade intraday, this is how you have to adjust your trading patterns, buy on the lower side and sell on the higher side. And any strong one side move will come only after we breach any of these levels. Talking about Bank Nifty also, we see that 47,000 is holding very well, and 47,750 on the upside is the resistance. Then again a 700 points of range for you to play on daily basis till any sort of decisive move goes past ahead.
All right. Amrish, hi, both of you. Good afternoon. Amrish, markets themselves, any thoughts very near term?
I think near term, the trigger is going to be the earnings. And we should remember that Nifty has moved close to about 2,000 points from the time we had the last earnings, the Q2 earnings. So unless there are major surprises across this time, it could be a bit difficult for the markets to hold on at these levels because clearly I think 21,800, 850 is a major resistance. I think going beyond that would be difficult. So, I would play more on the downside because I think once we break this 21,400, 21,500 levels decisively, I think it can be a decently big fall from there. And I expect that earnings could be a trigger for that because it will be difficult for most of these companies to keep surprising analysts and investors, especially after a move like what we have seen.
Okay, all right, gentlemen, stay on. We'll have some more questions for you. Now let's focus on what was really the stock of the day. Polycab tumbled over 20% after the Income Tax Department announced search operations at the cable and wire manufacturing company. Of course, these searches happened in late December, but what was new was that the IT department came out with a very specific release saying that the company has allegedly indulged in unaccounted cash sales of nearly 1,000 crore rupees in order to evade tax, and a couple of other discrepancies as well with respect to their distributors. Hormuz is joining in with the details. Complete smackdown on the stock today, Hormuz.
Absolutely. That's not a wire you'd want to touch as of now at any point. The stock was down 21% today, the biggest single day drop that it saw since its listing. And it was also on significant volumes as well. Almost 2 crore shares were traded compared to a 20-day average of just 7 lakh. And as a result of this fall, the stock has declined below all 3 key moving averages, the 50-day, 100-day and the 200-day moving average as well. And the stock, today's fall and over the last week or so, the stock is down almost 30%. But before that, the stock has been a 10-bagger since it listed in April of 2019. It had an IPO price of around 538 rupees. The issue was subscribed around 51 times, making it the 5th most subscribed IPO of 2019. And as of December last year, the stock had made a record high of almost 5,700. And so it's almost a 10-bagger since then. Now, incidentally, besides this year, which is 2024, Polycab shares have delivered positive annual returns every single year since it listed, which includes 100% plus returns last year as well as in 2021. Now, promoters of the company have gradually reduced their stake over the last few quarters, currently at just under 66%. But interestingly, the domestic mutual funds, their shareholding in Polycab is now at a 3-year low. As of September, it's at 6% compared to the 8% peak that it made in March of 2022. But on the flip side, foreign investors or FPIs have increased their stake in Polycab. As of September, they owned around 12.5% compared to the 6.5% that they owned as of September of 2022. And in terms of delivery as well, over the last 5 sessions, the delivery 30 to 40% of the shares traded have been marked for delivery, with quantities ranging from anywhere between 30 crores to as high as 650 crores. But the street does not like uncertainty. That's what has happened with Polycab today. The management continues to deny the allegations, but the screen is painting a completely different picture altogether.
Like how you put it, not a wire you want to touch right now. Thanks very much, Hormuz, for that. You know, the other big mover was Hero Motocorp. Was actually 5% higher, one of the big gainer, actually the biggest gainer in the Nifty. Now, we learned from sources that the company plans to showcase a range of products on the 23rd of this month. It may also display prototypes that will be launched in the next 2 financial years. Parikshit has been telling us about the story. Parikshit, over to you.
Well, significantly, there is going to be a 440cc motorcycle that will be launched by Hero Motocorp. And they had promised this some months back when the Harley-Davidson X440 was launched. So essentially, this is the same platform, same engine, but badged as a Hero Motocorp motorcycle, which will be sold across the country, possibly have a bigger retail footprint than Harley-Davidson X440, and will also be exported to global markets. Very important in Hero Motocorp's premiumization strategy. This is the first time that they are entering the 400cc plus segment. In their stable, they have 100cc motorcycles, 125cc motorcycles, 150, 200cc. But this is the first time they will get into the middleweight segment, challenging Royal Enfield and also challenging Bajaj Auto, which already has 2 Triumph motorcycles. They did about 18,000 units of Triumph in Q3, and they're ramping up production to almost 10,000 per month for the Triumph bikes alone. So there is a big challenge for Hero Motocorp. Their task is cut out. It's not going to be easy. But apart from this, Hero Motocorp will unveil a medium to long-term vision for the next 2 to 3 years at this Hero World event on the 23rd at their Center for Innovation Technology, their R&D center in Jaipur. A range of motorcycles and scooters in the ICE segment, electric vehicle segment, flex fuel segment will be showcased, and some of them will be ready for launch this year as well.
All right, Parikshit, thank you very much. And that got the market quite excited, the premium push at Hero Motocorp. Let's focus on the third key stock of the day, and this is Shriram Finance, which rallied almost 6% on the back of a positive brokerage note from Goldman Sachs. Goldman has actually upgraded the stock to a buy. They say that earnings estimates perhaps could be increased as well. Let's go across to Abhishek for more. Abhishek, what is making Goldman Sachs so optimistic on Shriram Finance?
Growth rate, which is, expected to be better than historical average that you have seen for Shriram Finance. So Goldman Sachs has written on Shriram Finance. They have upgraded the stock to buy from neutral. Target price has been increased by more than 43% to 2,758 per share from 1,926 per share. They have raised the earning estimate by 10% for FY25 and about 13% for FY26. They have raised earning estimate given the fact that they expect better profitability, a CAGR of 22% on earnings over FY23 to 26. They expect strong credit growth, 19% CAGR over FY23 to 26, and with improving asset quality, that is declining gross NPA ratio, increase in provision coverage ratio, and declining credit costs, they expect profitability to improve. So favorable macro for underlying demand for the commercial credit portfolio is another argument they have given. And in terms of valuations, they say currently the stock is trading at 1.4 times 1 year forward price to book value versus historical trend of 1.5 times over the last 10 years that they have seen in price to book value. Back to you.
Okay, all right. Thank you, Abhishek, very much for the details on Shriram Finance. We have, of course, both our guests with us to talk about some of these big movers and shakers. Ambareesh, let's actually get your view on Polycab. Do you think the worst of the damage kind of played out today? And can the market go back to looking at fundamentals, etc.? Or do you think this is probably a knife right now, not worth catching, at least at the moment?
No, Surabhi, I think it's a bit too early because it's just been one day of a major fall. Because although we have seen levels of 5,600 levels, but then it's actually fallen from that 4,900 levels. And today was a major fall day. I think it can continue for a while longer, but may not be as steep as what we have seen. And since this issue is still fresh, I don't see, serious buyers or like mutual funds or institutional investors coming to buy. Even if it falls either 500, 600 rupees from here, I think it'll take a while. Like I said earlier, when you speak to people in the electric trade, they are not really surprised by what has come out because they believe this is a normal practice in this trade. But then in the stock markets, clearly we take it as a major corporate governance issue. And looking at that huge institutional holding which has been there in Polycab, it's quite natural that we'll see this amount of selling. I believe that we can see levels of about 3,500 levels or even below, maybe 30 to 3,300 levels, and it can possibly languish there for a while. And only once we start seeing the growth which the management has been talking about, is coming consistently over a couple of quarters. That's the time I think interest will again come back. So for HNIs or retail investors, it makes sense buying it closer to about 3,300 to 3,500 levels. Have patience, hold on for the next 3 to 4 quarters. I'm quite sure we'll get a extremely good return from those levels, but patience I think will be required.
Will be required and will be tested, as Ambareesh is saying. Shilpa, 30 seconds each, 3 names. Polycab, by the way, it's broken on daily charts all the way from March of 2020 from the 570 levels. It's kind of broken that upward sloping trend line. Today is broken. But anyway, Polycab, your view, levels. Shriram Finance, which continues to move higher and higher, and Hero Motocorp. Shilpa, go on.
Polycab, we should be avoiding because the levels, once it was breached 2 days back below 5,000, it's gone. Now it's in a free fall range, so avoid till it doesn't sustain above 4,600 again. Hero Motocorp is very bullish. We are looking for targets of 4,700 to 4,800 on the stocks. On declines till 4,200, it is a buy again. And we are talking about Shriram Finance. Shriram Finance is absolutely a delight now for a move till 2,500. Any declines towards 2,130 is a buying opportunity.
All right, that's snappy. Thanks very much, Shilpa. Appreciate it. Ambareesh, great to have you with us here on the program as well. Thank you for joining us today. Well, let's take a look at some of the corporate voices that we got through the course of the day. The European Union has decided not to renew the approval for an important molecule, a key product for Aarti Industries. The news came out, a day or two back. We had the management with us today. CMD Rajendra Gogri, who joined us, said that the impact of this move on intermediate volumes will be around between 3 and 4%. He added that discretionary demand overall for the sector should recover to normal levels by the first quarter of the next financial year.
Keystone Realtors, popularly known as Rustomjee, gained in trade today on the back of the company's Q3 business update. Chairman and Managing Director Bowman Rustom Irani told CNBC TV 18 that they are expecting to grow at a rate of 25% and continue to remain strong in terms of redevelopment projects as well. With that, we'll take a very quick break on the show, but we will come back with our popular segment, D Street Chatter, and also tell you about the events to watch tomorrow. Welcome back. It is time for our special segment, D Street Chatter. Well, let's straight away go to Nimesh to figure out what the buzz was like today. Nimesh, what did you pick up?
I should be a relatively lackluster day of trade. After the gap up, we saw a bit of consolidation. But again, it's the broader markets which outperformed. So in terms of individual names, first couple of large blocks, Suyaktili as well as Bharat Wire. In both the stocks, there were a block of more than 1.5% equity changing hands. And in both the companies, I understand a US-based long-only fund was a buyer. So disclosures would be important there. The second name is Ircon. Within the PSU, this is one stock which is seeing a good amount of buying interest from larger HNIs. And the buzz is that maybe the company is going to bag a large order very soon. So that's the buzz on Ircon. The third stock is Indus Tower. After the BOFA upgrade 2 days back, the stock has been consolidating. But now I understand there's going to be a large block deal, a possible clean-out trade from some larger FIs in Indus Tower very soon. So that's a trigger there. And the last one is Trend. That's been on a tear of late. It was a big stock of 2023 at record levels. But at these levels now, some bit of profit booking is visible. So for second day running, sell flows in Trend at a leading FI desk.
All right. Nimesh, always an interesting list. Thanks very much for that. Well, let's get you some important market opinion that we got. Sunil Kaul of Goldman Sachs remains positive on the market. He says that lots of global investors are keen to raise their allocations to the market here. Listen in.
Overall, we think this year we could see Nifty hitting 23,500, which is about 9% upside from current levels based on our return expectations. We do think India should be a market that will continue to perform well this year. If you look at the global long-only funds, they are still underweight India.
Okay, well, let's move to some more market opinions. CLSA's India strategist Vikash Jain says 2024 has started off with elevated expectations, but we may not see a big rally. And at some point, in the first half, the market could actually get spooked.
Broad thought process when we are constructing the focus portfolio, and we also had another report where the title of the note was "Greed is not good." This year is unlikely to see a runaway rally like last year. Of course, I hope that I'm wrong and we have a great rally, but it doesn't look like this year. So from that perspective, I am much more heavy on risk-reward mindset in the portfolio picks that we have. Clearly trying to protect downside, and wherever we see reasonable risk-reward, trying to play that upside. I think the benchmark to beat to outperform will not be very high.
All right, so those are important market voices. Well, what does tomorrow bring in terms of events? Abhishek is here with that list. Abhishek.
Well, Prashant, to begin with, the U.S. core inflation rate will be seen closely. The previous was around 4%. This time it is expected to be around 3.8%. U.S. jobless data will be seen closely. Previous was about 202,000. So initial jobless claims will be seen closely. British data in terms of GDP data, manufacturing data and industrial production data will be seen closely. With respect to Indian market, tomorrow RBI will come out with the fortnight data on credit offtake as well as deposit intake by the banking sector. That will be seen closely. Along with that, forex data will be revealed as well. So we need to watch out for the forex reserve, which has been on an increasing trend. In terms of AGM tomorrow, Jindal SAW will be holding their AGM tomorrow. In terms of corporate actions, Newgen Software over there bonus issue will be seen 1-to-1 ratio, and Skipper Limited right issue over there. Results tomorrow from the IT pack, Wipro and SCL Tech will be coming out with the results tomorrow. Back to you.
All right, Abhishek, thanks very much for that. So that's basically what we're watching out for right here. I think the TCS numbers are coming through as we speak. So Rima is ready with us with the first cut. The first numbers are only trickling in right now. Rima, over to you.
Thanks so much for that. So TCS has reported a margin beat. That's the key highlight. The company's reported EBIT margins of 25.7%, ahead of street expectations of about 24.4%. Margins have expanded by 140 basis points quarter on quarter, and this follows 110 basis points margin expansion that the company had in the prior quarter. So two back-to-back quarters where the company is delivering on a strong operational performance. If you remember, the narrative about 18 months back was that of margin compression on account of supply-side headwinds. Attrition was skyrocketing. The companies were doling out bonuses, doing everything that they can to retain employees, and there was a lot of money money being spent on backfilling the attrition. And that had crunched margin. But now, going by the performance in the last 2 quarters, it appears that those supply side headwinds, which were hurting margins about 12 to 18 months back, is now easing. So this quarter, the company's reported a margin beat. 25.7% is what the company has reported in terms of margins, a 140 basis points expansion on a quarter-on-quarter basis, and even on a year-on-year basis, the company has delivered margins of 25.7%, which compares with 24.5%. So that's the key highlight. Now, when you look at the bottom line, the company has delivered an adjusted profit of 12,016 crore. The reason we're looking at an adjusted profit is because there was this long-drawn epic case, which finally got settled in the quarter gone by, and the company had said that they have to make a provision. To settle that case, they are making a provision of $125 million, which would hurt their bottom line. So the company has taken on that legal expense, and that's hurting their bottom line by 958 crore. So the reported profit number will appear to be much lower, and that's on account of an expected legal provision, a legal expense that the company has taken on account of an epic case. So therefore, most of the consensus all the consensus expectations were taken X of that. So we were looking at an adjusted number, and the adjusted profit number has come in higher than street expectations. The reported number will be lower quarter on quarter because of a large 958 crore impact that the company has due to that epic case, but that was known and already guided by the street. The street expectations were on an adjusted basis. So given the margin beat, the company has reported the company has reported a margin beat, and given that, there is a beat on the profitability. Another important factor is the TCV. The TCV for the company has come in at $8.1 billion. Fairly healthy. You would say it's lower on a quarter-on-quarter basis because in the prior quarter, the TCV stands for total contract wins. That is an indication of the new deal wins, new and old in the case of TCS. TCS reports deal wins as new and old. Infy reports only the new deal wins, and that also large, above $50 million. So they're not a like-to-like comparison. But for TCS, the company has reported 8.1 of deal wins in Q3. It's lower than what they had in the prior quarter, which was 11.2. But typically, December is a seasonally weak quarter, even for deal wins. So 8.1 would compare with, it's largely in line with what the company has been talking about. So wouldn't be too much of disappointment. Just talking about the statement that's come out from K. Krithivasan, CEO and MD, our strong performance in a seasonally weak quarter buffeted by macroeconomic headwinds demonstrate the strength of our business model with a well-diversified portfolio, customer-centric strategy. We're seeing strong deal momentum across markets, resulting in a solid order book, providing visibility into our long-term growth. We are seeing tremendous interest in generative AI, and we're leading innovation and exploratory efforts for our customers in this area. So the two key takeaways. One, Gen AI continues to be the hot topic of discussion, though the statement reads as exploratory efforts. So as of now, it's not that it's a material contributor to the company's financials. And secondly, is a reaffirmation that the deal momentum continues to remain strong, the order book is solid, and they have visibility into the long-term growth, not committing on the near term. Attrition on expected lines has come down to 13.3%, which compares with the 14.9% that they had. And if you remember, in the peak of the supply side constraints, attrition for the company was in excess of 20%. So these are the basic numbers. What I'm still awaiting is actually the dollar revenue number. Okay, dollar revenue number is still missing right now. So that's the key number that we're still waiting. Let me go across to Sandeep Agrawal, who's now with us. He's from Sovilo. Sandeep, your first read on TCS's numbers. What are the hits? What are the misses?
So, yeah, hi, good evening, and thanks for having me on the show. So, there are multiple hits, I would say. First of all, while we don't have yet the dollar numbers, but if you convert the rupee numbers which they have reported, it seems that there is a 0.5% beat on the revenue growth numbers as well versus estimate. So I think that revenue growth should be around 1.2% kind of number based on the back calculation which we can do. Obviously, it cannot be 100% correction, but seems to be quarter-on-quarter growth should be in dollar terms 0.6, 0.7%, and in constant currency should be 1.1 or 1.2%. As far as margins is concerned, if you recall, Rima, we have been saying that attrition fall is a very, very big mover of the margins, and that is what is reflecting in the numbers. And in my view, further uptick in margins by at least 200 to 250 basis points in next 2-3 quarters is very much possible, with attrition coming to 13, and I think it will come down to 11 in next couple of quarters. So if attrition comes to 11, 12, which is their generally traditional attrition numbers, then your margin should also go to 26.5%, 27%. So that is another thing. And thirdly, as you rightly mentioned, that TCV is not at all something to complain about. It is decent TCV. And Epic case is known thing, so I think a provision regarding that should not be a shocker at all. So I would say all in all a decent set of numbers, and obviously decent whatever commentary I have heard on your show only, it seems that it is a quite confident commentary.
Okay, just one error. The margin improvement is there is a margin improvement, but not to the extent. So margins have come in at 25%, an expansion of about 70-75 basis on a quarter-on-quarter basis. So margin expansion trend is very much there. Margins have expanded, but the correct margins are EBIT margins of 25%. The company has also said that their constant currency revenue growth is at 1.7% on a quarter-on-quarter basis. One reason why the street was talking about how this macro, the weak macro, is hurting the growth rate. Look at the way the growth rates for the company have come down. I'm looking at the constant currency numbers. Okay, in Q2 of FY23, the company was clocking in a revenue growth of 15.4% year-on-year. It came down to 13.5%. They ended FY23 with a revenue growth of 10.7%, still in double digits. But now come to FY24, at the peak of the recession worries and the slowdown concerns. Q1 FY24 constant currency year-on-year revenue growth slowed down to 7%. Further came down to 2.8% in Q2, and now it's down to 1.7%. The expectation is that given the strong deal wins over the last few quarters, the company, this will all ramp up in maybe Q4 and mostly in FY25, which will help the company's growth rates rebound, the execution of these deals. Among the major markets, the company has said UK has done well. They have been guiding for UK doing well. North America is under pressure. So North America has seen a decline of 3%. They have been cautious about North America, and this time too, North America is weaker in trade. Sandeep, the company last time, if you remember, upped the order win guidance. So earlier they used to talk about an order win in a range of $7 to $9 billion. Last quarter they said that, we can step it up, maybe $9 to $10 billion will be the quarterly run rate. Now this quarter it's come at $8.1 billion. Would you just attribute it to seasonality? Is there anything to read over here?
No, absolutely. This is seasonality because, when the company talked about, moving up the numbers, they talked about in a medium to long term. So I don't think it was immediate. And obviously this quarter, Rima, as you know, always seasonally weak. So expecting too much from this quarter will be a little far stretched. So I think, overall, all the numbers are looking decent. And particularly EBIT margin is very big positive surprise in my view versus estimate. Even at 25%, there is a surprise. And remember that attrition has now started coming off. So the benefits will flow in next 2-3 quarters in a big way.
Milind Lakkad, who is the Chief HR Officer, says the vibrancy and energy levels of our offices are increasing even more as employees are back to office. We expect to be back to normal operating mode by the end of the current fiscal year. So no more work from home. Employees are back and they expect a normal operating mode by the current end of this fiscal year. Attrition is trending down 13.3% and is now within their range, the comfort range. So attrition now is back to what TCS's long-term comfortable attrition rate is. They're committed to hiring from campuses and growing their talent organically. Just trying to, calculate what the headcount number has been this time, because the declining headcount addition by companies was also a bit of a worry for many of the people. So just, going to try and get some more numbers in terms of the headcount number. But, what can we expect based on this order win in terms of an FY25 growth rate? 4.7% is the dollar revenue growth for the first 9 months of the year, with EBIT margins of 24.1%. That's the 9-month performance. What can they end FY24 with, Sandeep, and what are the consensus expectations for FY25?
So, FY24, I think we will end up around 5% in terms of overall revenue growth. And I think EBIT margin will further improve in the fourth quarter because all the costs are now behind. So I think, 24.5 or 24.6 is something which the full year number should look like. And next year is the one where, first half you will be big beneficiary of all the deal wins which has happened. So I think, next year is a year where everyone is expecting around 8 to 10% kind of growth in revenue terms, constant currency, and decent margin than this year, around 40 to 80 basis point higher than what we end for the full year in 24, because, the attrition numbers will not be as high as we have seen in first half of this year. So that benefit will come in next year. So I think, 25.5% kind of margins and 8 to 10% kind of revenue growth is where everyone is looking at.
Okay, we're awaiting. We've got the Infosys numbers too. The company has reported a dollar revenue decline of 1.2% on a quarter-on-quarter basis. This is what the street was anticipating. Our poll showed the decline to be a little more severe at minus 1.8%. The company's top line has come down by 1.2%. EBIT margins have come in at 20.5%, largely in line with the CNBC TV18 poll of 20.4%. On expected lines, the company has lowered their FY24 revenue guidance. The earlier guidance was 1 to 2.5%. The new guidance stands at 1.5 to 2%. So they've tightened it. They have upped the lower end of the guidance and brought down the upper end of the guidance. I repeat, the earlier guidance was 1 to 2.5%. The new guidance is 1.5 to 2%. So they've basically tightened it, narrowed the guidance range. The earlier guidance range allowed for that flexibility of 150 basis points. Now they're quite certain growth will be within 1.5 to 2%. So that's the new guidance. And the company has also maintained its margin guidance. That comes in line with the street expectations. The constant currency revenue growth for the company has declined. It's declined by 1% on a sequential basis. This is actually slightly better than what the CNBC TV18 poll had thrown up and what consensus expectations were. So the read from Infi is that the numbers are not as bad as feared. It's still a muted showing with a revenue decline on a quarter-on-quarter basis, margins coming down because of wage hikes, but not as bad as what the street was fearing. The company's total contract value, again, the deal wins, and in the case of Infosys, they only announced the fresh deal wins and the large deal wins. This time it's come in at $3.2 billion, which compares with $7.7 billion. The deal win announcement per se from the companies this time has been fairly muted. We haven't heard of large deal wins, which dominated the narrative about 6 months ago. And plus, as I said, this is a seasonally weak quarter. Deal wins for Infosys at $3.2 billion versus $7.7 billion lower on a sequential basis, but the prior $7.7 billion for Infosys was also a record of sort. Lots of numbers trickling in, so let me just quickly summarize the numbers for you. TCS has had a good showing. The company's, I think, constant currency revenue growth on a quarter-on-quarter basis is roughly about 1% on a sequential basis. Street was expecting flat numbers, so it's a good performance on the top line. Margins have expanded by 70 basis points to 25% versus 24.3%. In the case of Infosys, it's a muted showing, but not as bad as the worst fears on the street. Revenues have come down by, I think, 1.2% in dollar terms. Margins have come down by, 70 basis points on account of wage hikes. But again, it's, not a very bad showing. And the company, on expected lines, has tightened its FY24 revenue guidance. The margin guidance remains intact. Sandeep is still with us. Sandeep, you want to come in and comment on Infosys numbers and what we've seen?
So, again, Rima, similar like TCS, I would say these numbers are slightly better than estimate on both revenue and margin front. Margin, everyone was around 20.3. They have come at 20.5. So that is slightly better. And also on revenue front, as you rightly mentioned, the decline was expected to be a little sharper at 1.4, 1.5% in constant currency. It is lower than that. So, and obviously, guidance has to be recalibrated because there is only a residual Q4. So I think that these numbers should also, you can say that they are either in line or slightly better than expectation. And TCS is also, again, slightly better than expectation. So I would say both the numbers are better than expectation. And the next year is what people will look at. And I think commentary when the earnings call happens and the press conference happens will be more important because that will give some highlight on how they are seeing the client budgets to be.
So Sandeep, the TCS management is fairly reserved about giving, very clear, indications of whether macro recovery is underway and we are going to see a pickup. So tell us, when we quiz the management and there is a press conference, I'm here at the TCS TCS house right now. Tell me, what should be the top 3 things that you would like to hear from the TCS management? Something that they can answer.
No, so we definitely want to know, which markets they are seeing pressure and which markets they are seeing stability, because see, if US market is the only one where they are seeing pressure, then I think it is a good news in the sense that that pressure is now receding very clearly. We are seeing that in all the tech companies in the US also the pressures are receding. So if that is the concern, then I would say it is more of a current concern. Outlook should be better. If there are new markets where they are seeing some kind of pressure or uncertainty, then that is something which needs to be built in. But the key markets is US, and if in US also they say that they are seeing lesser worries than earlier or some kind of positive statement, then it is a very big relief in my view. Second thing, on how they are building up their new capabilities on the Gen AI, how many people have been trained, that will be very important to know, to make a note, because basically when all these technologies stabilize and go for large scale transition deal, then obviously you need to come back to the larger vendors who can provide you with support at a large scale. So that is something which is very important. And thirdly, I would say that how the management is seeing the people retention, because while attrition for the whole industry is coming down, which is a good news, and at the lower level there are more people, so it can be averaging the attrition lower. But is there anything which they are seeing at the top level and middle level, and if it is so, then how they are managing? So see, this is a people's business, so people we need to know a little more about the people and the technology and obviously the markets, and this 3 sums up all the requirements what you need to know for taking a call for a longer term.
Okay, and how do you suspect the stocks, both Infy and TCS, will react?
See, I think, these numbers don't warrant any negative reaction on the stocks.
Okay. But the stocks have already had a pretty good run in the last 2 months. So are they pricing in this kind of a performance? Because it's not that it's, the numbers are suggesting that the recovery is actually underway today. They're just not a very poor set of numbers in that sense. They're not bad. They're good numbers, stable numbers from TCS, not bad from Infosys. So is there anything in these numbers to cause an upgrade and cause a stock rally?
No, there is nothing in the number to cause an upgrade. But Rima, markets are always very smart and ahead of time. So if you recall last year in Jan, when attrition numbers started going up, then all the managements were very bullish because demand was very good, but margin was collapsing because of high attrition. So stocks were sold off much before, actual pain came. And similarly now, I think last 3-4 months since August, everyone is buying. So I think, there is a lot more things to be positive about rather than negative. So markets will, I think, cheer with this number, and they will keep the good investors and long-term investors will start accumulating or continue to accumulate. So I don't think that, the short rally which we have seen in the last few months is enough. I think there are more steam left in the large names at least.
Okay, Sandeep is bullish over the longer term. There is enough in the numbers to keep the faith in the IT stocks over the long term. Sandeep, thank you very much for joining in with your insights on, on both Infy and TCS. Prakash Diwan is also joining in. Prakash, let's address the 2 numbers one by one. First, your top 3 takeaways from TCS.
No, so honestly, the way the market was anticipating going into these results, there was not much of a build-up of expectations which are very high. So on all counts, if you ask me, at least on the TCS side, most of the things seem to be very much within the expectation band. There's nothing which is any way surprising, good or bad. So, I mean, I know it sounds very indifferent of sorts, but that's the way these numbers, that's the way I read these numbers.
Okay, and what about Infosys?
So Infosys, there are a couple of interesting things, especially related to headcount and all, which in my view is something which probably starts telling you that things could change. We also saw that, that interim increment that they had announced some time back, I think about a month back. That was the first indication that they're probably, anticipating some sort of a build-up in order values, new contracts, or, the execution could kind of ramp up. So that, I think, is again, an endorsement or a validation of that view, which is something which probably seems more positive. So the market would probably like that and start believing that things could improve for Infi from here on.
Okay, actually, TCS's numbers, now when you look at it, are not bad at all. It's a revenue growth of 1%. Now, December, for most companies was expected to be a flat or a negative growth kind of a quarter. For TCS, the CNBC TV18 poll was for a flat constant currency growth. In comparison, TCS has delivered a growth 1% QOQ, and plus there is that margin expansion which the street was not anticipating. One of the key reasons for this beat appears to be the ramp up of the BSNL deal. BSNL deal was won last quarter. It was a large $1 billion deal, and the company in the commentary had spoken about execution, the deal ramping up in a near term, in 12 to 18 months. So if you look at the geography-wise performance, India appears to have done very well, with about a near 25% growth on a quarter-on-quarter basis. Plus, the supply side situation, continues to, improve, with the attrition also lower by 160 basis points on a quarter-on-quarter basis and nearly 800 basis points on a quarter-on-quarter basis. The headcount for the company, though, continues to moderate. Even last quarter, we had a headcount decline. We had it in the previous quarter, and this time too, I think nearly 5,000, there's been a decline of more than about 5,000. About Infosys, just a quick word, it's a muted showing, but not as bad as the worst estimate on the street. -1% constant currency revenue growth. Margins have come down to 20.5%, and the guidance band has been tightened. 1 to 2.5% is 1.5 to 2%, and revenue margin guidance has been maintained at 20 to 22%. Prakash, we always ask you this, between Infi and TCS, which one? Based on these numbers.
That's always a challenge. But on the basis of these numbers, I would still go with Infosys. Not for any other reason, but it seems to be slightly ahead of the curve in terms of the change in trend. If there is an improvement come Jan, Feb, March, you'll see a lot of new contracts being awarded. And if that happens, the 1.2% down revenue for Infosys is far lesser than what we were kind of building up, right? And I think from a 6-month to 12-month perspective, Infosys could probably be slightly ahead of TCS in terms of moving through, and it's not performed. Last 12 months, it's always lagged by almost 12% or 11% as compared to TCS for various reasons. So I think the catch-up is more due on Infosys basis these numbers, which are much better, as I said, than most expectations, which are slightly pessimistic.
Infosys is also said to have a higher proportion of discretionary projects in their portfolio, which or generally the discretionary kind of work that they do. So when the macro recovers, Infosys, according to analysts, could, enjoy that, extra bump up. It got hit harder compared to peers like TCS on the way down when discretionary projects were being cancelled or put on hold, budgets were being tightened, and the reverse will happen. When the tap opens for discretionary spending, according to analysts, Infosys could be better placed because in its portfolio, it has a higher dependence on, these short cycle discretionary kind of projects. So that's one of, the views on the street. We are awaiting, Prakash, the Infosys management. On the HR side, what's been playing out? Now, I'm not sure how much the management will comment on it, but is it a big worry from an investor point of view, this entire senior management attrition, or do you think that bench strength is deep, the leadership is broadly stable, and therefore it should not be a concern? It's more of a noise.
No, so theoretically, it should not be a concern, given all the other parameters around their bench strength and the kind of percentage of what attrition you've seen on this particular segment. But it's always a challenge in terms of how this cascades into something which is more of a deep-seated trend, which can be damaging. So what the street doesn't like is uncertainty, and if this continues to be something which the management has no control on or no visibility about, then it becomes an issue. So I think if it is calibrated and they've managed to mitigate it with some plans in terms of internal shuffles and resetting some of the responsibility metrics, then I think it should still be okay. So we'll have to wait for that and how articulate they are on this part.
Okay, thank you very much for that. Just trying to see if we get some more numbers. Yes, the TCS dollar revenue growth has come in at 1% growth at 7,281. That's the TCS dollar revenue growth, 7,281, a growth of 1%. The street was anticipating a bit of a flattish performance. Also, one more, correction. The profit figure, the adjusted profit figure for TCS is not 12,000 as we've been highlighting. It's, it's 11,735. So that's the adjusted profit figure we need to work with for TCS. But that doesn't take away from the fact that it's a good showing from TCS and Infosys too, not as bad as what the street was fearing. So are IT companies now back on that recovery path? We'll know. The the Infosys management will be joining in for their press conference very soon. So we'll get into a quick break. We'll come back with the Infosys management. Stay tuned.